Hello, San Diego. Well, 2024 is off to a hot start with home prices increasing already. This is your February 2024 housing market update. I'd like to jump right into the data. So, this slide shows that the median home price in San Diego went up to $820,000 at the end of January. That's up 9.3% from the same time period last year. The number of new listings was up by 9%. Market time down by almost 20% to 32 days. The months of supply up, we're seeing a little increase in inventory in January, up to 3.7 months, and the number of sales relatively congruent between December 2023 and January 2024. Let's take a closer look at prices over time. We see that home prices dipped in December and started to come back in January. And here in late February, we're already looking at home price appreciation up to $850,000. So we're likely to continue to see home prices rise as we get deeper and closer into the spring season. One of the things I'd like you to notice is over time, if you look at this graph, every January we see prices had stabilized a couple of months before, and then they start to go up in January and February, and then peak typically around May, June, or July. And we've seen that every year consistently for just about as long as I've been in the business, for the past 19 years. Here is the inventory slide. We see that inventory very, very low, 3255, less than 4,000 active listings on the market. And this low inventory situation is definitely helping to keep prices up and contributing to that increase in home prices that I showed you on the previous slide. Take a look at home price movement over the past year. This is for 2023 data. You can see that San Diego was one of the stronger markets with growth of 8% year over year. And important for us to talk about interest rates. So interest rates were coming down from July into December pretty consistently. However, come January and February, we've seen that those interest rates have moderated slightly, and that they've actually come up a little bit in the last couple of weeks. I've showed this slide before, above 7%, we can anticipate cooler buyer demand, and above 6.5, once again, cooler buyer demand. So we still have some buyers on the sidelines because of the interest rates. However, homes still are selling, and that low inventory situation is continuing to keep prices buoyant. As regarding projections for interest rates and where they're planned to be, this is from the chief economist at Fannie Mae, fully expects that we'll see interest rates closer to below 6% by the end of the year. And this slide was from Fannie Mae. It shows their projections for mortgage rates in December and then in January. You can see they're a little more optimistic in January. However, I think, as I showed you in the last slide, with conventional rates around 7, they may have underestimated or over-anticipated lower interest rates at this time of year. However, the projections are that they'll come down below 5% below 6% by the end of the year. And let's keep an eye on it, an important factor in the market. I've shared this slide with you in the past as well. One of the things that buyers are doing to get around the higher interest rates is what's called a 2-1 buy down. For example, if the interest rate is 7%, in the first year, they'd make payments based on a 5% interest rate. And then in the second year, a buyer would pay a payment equivalent to a 6% interest rate. And then in the third year, the payment would be at a full 7%. And the theory is that or the idea is that if you anticipate that interest rates will be going down, you can refinance sometime in the future, but make the home affordable over the next couple of years with this tier one buy down. So a very useful tool for many of our buyers, and also sharing it in our listings to help our buyers understand how much they can afford, and homes can be more affordable with some financing options like this. This is the San Diego Market Action Index. We see that it's gone up slightly over last month, and we still are in a strong seller's market. So what have we seen so far in 2024 into our second months? We've seen interest rates kind of plateau, come up a little bit in the past couple of weeks. As I shared with you, inventory is low. As interest rates come down, we're likely to see a little more inventory come on the market, and that'll put a little bit of downward pressure on prices, help to moderate at some level. However, if the interest rates come down substantially, you're going to see a lot of buyers coming back in the market. You'll also see a number of sellers who've been remaining in place because they've got very low interest rates from the pandemic timeframe that will start to put their home on the market as the gap between the current interest rate and the interest rate that a seller holds gets lower. They'd be more motivated to sell. What we're seeing out in the field competition wise, for all the listings that I've had, we've had multiple offers and are selling relatively quickly within a couple of weeks for every listing that we've put on the market so far in 2024. So strong sellers market. However, there still are some opportunities and some deals to be had out there. So as always, I'm Woody Henderson, broker for American Dreams Real Estate, and I am here to be of service. If there's anything I can do for you, please let me know. Call me, DM me, email me. I'm here to be of service. Until next month.